My name is Matt Fuller, and I'm a partner in our capital markets and accounting advisory services group here at PwC Canada and the alumni partner lead for Alberta. I'd like to welcome each of you as we kick off summer with a virtual fireside chat from optimism to opportunity as we discuss our findings and perspectives from our 24th CEO survey with our very own PwC panel. For today's event, we've brought together a diverse and strong group of industry leaders. So let's start with a quick roundtable of introductions. I'll throw it over to Reynold, who's being a bit shy today and having some technical difficulties. So Reynold, we can start with you.
Yeah, sorry everyone. I don't know what happened. My camera's not working on my computer right now. So Reynold Tetzloff, I'm the Alberta Managing Partner for PwC.
Great.
Janice?
Thank you. So I'm Janice Norona, partner in our sustainability and climate change practice. I've been in this field now for more than 20 years and advising companies on their corporate strategies, value creation as it relates to ESG. Thank you.
Dave?
Hey, good afternoon, everyone. My name's Dave Bryan. I'm the private company services leader for Alberta, and it's awesome to be here with everybody.
Great. And last but not least, Jean.
Hi, everyone. Jean McClellan. I lead the Workforce of the Future practice for Canada, and that's really all things human in our world of business. Nice to be here.
Great. Thanks, everyone. So to begin, I just wanted to give everyone a bit of a background on our CEO survey. In its 24th year, the CEO survey aims to inform and stimulate the debate on how businesses are facing today's challenges. The global survey is traditionally released at the World Economic Forum in Davos, except for this year due to the pandemic. After the global release, the Canadian data is analyzed and released to explore Canadian priorities and how Canadian sentiment differs from the global perspective. The survey was conducted in January and February of 2021, and we had a record level of Canadian participants this year, with 337 chief executives from across Canada, 61 of whom reside right here in Alberta. Insights from the survey reveal what CEOs are prioritizing for their businesses to thrive in the current environment. So for today's fireside chat, our findings from the survey will be themed around Alberta, public and private company perspectives on key areas, including workforce of the future, ESG, and regulatory concerns. So perhaps I'll start off with you, Reynolds. Perhaps you can give an overview of some of the key themes that emerged from the study this year.
Sure, thanks, Matt. It's interesting. Normally with the CEO survey, it's a pretty good barometer for what people expect the economy to do going forward. If you look at this year, for example, 72% of Canadian CEOs expected global economic growth to improve over the next 12 months. But if you look historically, in 2018, that number was 72%. Then in 2019, it dipped to in the 30%. And then all of a sudden last year, it was 14%. And this survey is done January and February. So optimism was at an all-time low of 14% before the pandemic ever even hit. So unless these CEOs maybe knew something we didn't, it's quite interesting to sort of look at the facts and kind of show that the economy does sort of trend with how the survey goes. And then if you look at the Canadian CEO in particular, and we had a great turnout for this CEO, as we mentioned, really there was a few key items that came out of it. One was around cyber. There was some interesting facts around climate change, and then people was also sort of a key theme in this. Cyber probably isn't new or surprising that it would be sort of high on the list and high on the list of threats for growth. If you think about all the digital, all the virtual, sort of working remote, and just the way the world is right now and all the threats, it really wasn't a surprise that it was there. But what's interesting is what happened ever since the survey, and we look at all the sort of the large international cyber incidents that have happened over the last few months. It's quite interesting that this was a major threat seen by most CEOs, and we see how that's playing out. Another one was around ESG. The ESG one is interesting in that a lot of the Canadian CEOs are probably looking to invest less in ESG versus some of what's happening around the globe. And there is a difference there, and a difference in how serious the rest of the globe. And maybe it's because Europe's been living in this ESG world longer. But even within Canada, regionally, there are differences as well, west versus east, that I'm sure we'll get into. And then lastly is around investing in people. And people was a key theme. And really, it's investing in leadership and talent development held the number one investment spot regarding the people section of the survey. And so maybe just quickly on Alberta, because Alberta is interesting as well. Alberta, the key threats were overregulation and government policy versus nationally and internationally, it was cyber and pandemic were really the top threats, which is quite interesting and probably not surprising for people based on the world we've been living in here in Alberta. But there is still growth and anticipated growth in Alberta where, it was still optimistic, where 72% of the CEOs were optimistic about growth. But in Alberta, out of all the sort of the major provinces, some of the CEOs expected their revenues only to increase, their own personal revenue to increase only 31% in their company, versus globally they thought it was going to increase by 72%, sort of the optimism in the economy. So there was a difference there, probably because we've been living in a downturn for as long as we have. I think people are still pretty cautious in the province. So I'll kind of leave it at that, Matt, but that's sort of a high-level overview of some of the key themes.
Great. Thanks, Reynold. But before we go into those three key themes that emerged, Dave, was there a difference in optimism that you're seeing between private and public companies?
Yeah, it's super interesting, Matt. We got some really interesting insights. And when you peel back the layers, it was interesting to me, first of all, to set the stage, 70% of the respondents to the survey were private companies. So you've got obviously a big private company influence on the respondents. But what we found is, generally speaking, private company CEOs were what we called fairly optimistic when it comes to the global economy and revenue growth, but they were really, really optimistic when it came to their own growth expectations. So a little bit of a disconnect there, and they were certainly much more bullish than their public company counterparts in terms of what their own growth expectations will look like coming out, coming out of our COVID setback. The other piece that was interesting to me, and we'll talk a little bit more about that, particularly when Jean's presenting, is private companies CEOs expect their headcounts to increase. And I think that ties to their expectations of growing revenue. They expect they're going to grow revenue, expand, they'll need more people. So it was a couple of interesting insights about the optimism of private companies in Alberta.
No, that's super interesting. Thanks, Dave. So for the first key theme is that nationally cyber was the biggest threat to growth. Whereas locally in Alberta, it was about over-regulation and policy. So Reynold, can you comment on this?
Sure. If it's probably not surprising, like I mentioned already, around cyber. What is surprising around cyber is the fact that while it's a top threat for growth, only 61% of CEOs in Canada have factored cyber threats into their risk management activities, and only 69% are actually going to increase their investment in the area, which is lower than I think we would expect. And then over-regulation, we've been living in this for the last 15 years around regulation and policy and concerns around government policy. And so it's not surprising that that's really high in the Alberta region with regards to threats and growth and everything. We've been living in it forever. So.
Right. And Jean, from a workforce of the future perspective, how do you think that workforce strategy is going to support or help even alleviate the concerns about overregulation and policy?
Yeah, so we know that regulation and policy is here to stay. It's likely going to increase. It's going to change, and we're going to have to change with it, whether we like it or not. And so that, when you couple that with what's happened in the pandemic and the wild ride that we've all been on, the workforce is tired, right? And so it's no longer possible to just keep layering on added things like regulation and policy. So we really need to re-engineer what our workforce is doing from the ground up. So, really taking a hard look at what skills we have, how we interact with tech and AI, how we've built our leadership skills, and not just at the C-suite, but all through the organization. All of those components are really important now because our workforce is really taxed. And when we're going to take on new policy, new regulation, we have to re-engineer.
And Janice, what are the opportunities that you see companies have to dig into their ESG strategy in that vein as a way to alleviate concerns over regulation and policy?
Yeah, absolutely. Well, companies can be thinking and acting on ESG in a very proactive way. There's an opportunity to prepare for and really position business models so that they can take advantage of government regulations and policies. When you think about it from a social perspective, we're already seeing a lot of investment and deeper dives into health and safety programs, well-being of people, as well as social equity. The crisis that's happened over the past year, a lot more going into, human and Indigenous rights, and really aligning this with the government's objectives around, safer, more inclusive, accessible, and equitable societies. And, from an environmental perspective, we're also seeing many industries starting to take advantage of opportunities to truly decarbonize their businesses in alignment with the federal government's ambitions towards net zero. And what that brings is really efficiency in the business, process improvements, fuel switching opportunities, investments in cleaner technologies such as hydrogen, all the way to carbon capture and storage. So I think it's really quite an exciting time. And locally in Alberta, I think we've seen some really interesting opportunities come up. An example being the Oil Sands Pathway to Net Zero initiative, a really interesting example of, companies aligning with the federal and the provincial governments to really promote and accelerate investment in research and development into new technologies, while at the same time engaging local communities to truly benefit from local resource development. So a lot of opportunities ahead to take advantage and prepare.
Right. And Dave, is there a public-private lens to add to that?
Yeah, and I know we'll talk a little bit more on ESG, and I'll bring a bit of a perspective from private companies on that topic a little bit later. But, Reynolds touched on overregulation and government policy, and that, obviously was a big theme out of the private companies. And I think it's, as Reynolds articulated, it's due to our focus on the energy sector, which tends to be impacted by these regulations and these policy changes. But what we saw through the pandemic is some changes in the private company space. And as a result, some of the private company CEOs seem to be less concerned about that. And where that comes from is a lot of them have shown resilience in the past when there's been policy changes or regulations. They've just found a way to navigate through, and it might be a little bit easier because they're a little bit more resilient, maybe a little bit more ability to have a higher ability to adapt to change than maybe some of the big public companies. The other piece that I thought was interesting and came out in my conversations with some of our private company clients is they've started to shift a little bit more to a global customer base. And so their customer base isn't necessarily just in Alberta and just impacted by Alberta regulations and Alberta policies. They've expanded out globally. So if things get a little too dicey in Alberta, for example, they've pivoted and gone to markets where maybe it's easier to do business and to do different things and try new things. It's not that they're going to be gone forever. They come back, but they've done a good job of shifting in sort of a little bit of an uncertain world and adapting to a more global economy, and then so they're not as impacted by these regulation changes.
Great, thanks, Dave. Now moving on to ESG specifically and sustainability. Now in the survey, the regional differences were certainly interesting. Janice, can you touch on Alberta CEOs taking the threat of climate change more seriously than the average?
Yeah, absolutely. When you think about it, in Canada, the CEOs broadly, about 2/3, 68%, actually haven't factored climate change into their strategic risk management activities. And this is, somewhat concerning at a time when action is critical. And just under half have even plans to increase spending compared to, more than about 60% globally. So if you look at Alberta CEOs, on the other hand, it's quite interesting because they appear to have taken the threat of climate change much more seriously than the average. So while they are less optimistic about the government's ability to balance these short-term economic needs with long-term environmental goals during this recovery particularly, they are more likely actually than other provinces in Canada to be planning to increase investments in ESG initiatives. Now, this could actually be because they are trying to alleviate pressure to decarbonize, while at the same time really focused and laser focused on operational efficiencies. Now, interestingly, from an industry lens perspective, if you look at Canadian CEOs in energy, utility, and even resource sectors, they are some of the biggest proponents of spending on ESG initiatives. About 70% of them, ESG is expected to be the most popular area of investment growth over the next 3 years. And they're really not waiting for the government. At the end of the day, it's really the industry needs capital. And the capital markets are truly directing them to what they need. So we're seeing that kind of movement happening on a broad view.
And Dave, you mentioned it earlier, but just there's a huge gap in the results between private and public companies surrounding ESG. Can you tell us a little bit more about this area?
Yeah, and I completely agree with what Janice said. But what's been interesting is that gap, Matt, that you talked about between pubcos and privates, and the CEOs of the private companies are less likely to be investing or concerned about ESG right now. But and the only thing that I can tie it back to, and based on some of my conversations, is that concept of they've got different stakeholders right now. And so, you're not getting shareholder groups, for example, showing up at your annual general meeting concerned about your environmental policies. That's just not happening at the private company level. And so I think that there's a little bit of a sense that it's not going to touch us, or we don't need to worry about it. And I would say that in the short term, that might be the case, but long term, you have to think more that this is coming. It's going to be cascading down. And where we're already seeing that is we're seeing some of the banks, for example, or private equity firms are saying, we're interested in supporting you as a private company, but we want to see your ESG strategy. We want to make sure that your strategy as a private company aligns with where we want to go as a private equity firm. The other piece we're seeing is, let's say Suncor is your client. You may hear, as a member of their supply chain, somebody saying to you, we need to see what your ESG strategy is, because we're holding all of our suppliers accountable to the policies that we're trying to demonstrate as an organization. So you really can't avoid it. And the last one, and Jean touched on this too, is also employees. We've got lots of instances where employees are now asking the question of, what's your firm's ESG strategy, and how will that impact me if I decide to come and join your organization? So, and we saw that come out in our D2D conference, that concept of, it doesn't seem to be hitting private companies yet, but it's coming, and it's coming on multiple fronts. And so you need to be starting to think about, what does your policy look like? And it's not just the environmental part, it's the social part, it's the governance part. All of those need to tie together, because people will be asking questions around what you're doing and how you're being part of this movement.
And that's a great tie-in. We talked a bit about already the strategy overall, the public-private company differences and gaps. Now, Jean, how can a company's workforce strategy support the social elements of ESG?
Yeah, and it definitely does. And I think it all starts with trust. So we see that as a work community, we're challenged in that regard. So you look at businesses, governments, educational institutions, media, there's a lack of trust in the world of work right now. And that is where our first focus needs to be. And so it really puts an onus on the leaders in those areas, no matter what part of the world of work you're from, to really lead and get out in front with purpose and values and ethics. And so now the conversation and the narrative has to be much more than just the bottom line. Beyond that, as we look at ESG, I would say that many organizations are quite focused on the E part of ESG, right? The environmental part, net zero, climate change, that is starting to permeate our conversation. But as Janice mentioned, the social part is quickly becoming a key area of focus. So you see, for example, diversity, equity, and inclusion as one of those things that's taken center stage with the Black Lives Matter movement. And it's really something that is top of mind. So the key for organizations now is to move these initiatives off of something that is just reporting, just compliance, just a project on the side to something that is truly embedded in the processes and the structures in our organizations and in our everyday culture. So that is something that is quite a fundamental change for most businesses.
Great. And keeping it with you, Jean, our third trend in the survey is workforce strategies. So 51% of Alberta CEOs say they plan to change their organization's culture and workplace behaviors. How important do you think it is for businesses to adapt their workforce strategy to create value amidst the impacts of the pandemic?
Yeah, it's extremely important. So when you look at the optimism, it just really goes to show the business resilience that is here in the province. I think it goes to show the resilience that our workforce and teams have. And so that obviously is now translating into confidence for the future, but that confidence isn't strategy. And so we have this brilliant opportunity to say, so now what? Instead of, I want to go back to the way it was. And it is really keeping that kind of mentality and mindset at our leadership tables in our conversations with our teams that really is going to make that fundamental shift. So from a people perspective, we know that CEOs are looking to make investments in leadership and talent. This pandemic changed the way we work, and it put pressure on all levels of leadership in the organizations. And so while many of our senior leaders said, hey, we can adjust to the change, we know how to coach and reach out to our teams, those middle managers, the ones that are that are potentially new leaders, the supervisors, the ones out in the field, have been really, really struggling with this, and things like conversations about wellness. I have to say personally, I've never had so many conversations about wellness and had to really dig into some of those skills. And most of those skills aren't just naturally there for our leaders in our organization. So kind of leaning into some of the investments and helping them through some of these new conversations in their lives can be really of value for an organization. So 75%, I think, are planning on spending at least moderately in these areas over the next 3 years. And so I think that is a good investment and something that every organization should be considering. It's interesting, over the past, we've seen investments in upskilling, in a broader, digital skills and the like, and we're seeing that pay off as well. And so that availability of key skills that we saw was of issue a couple of years ago is starting to come down the list in priority. And so, that's really a testament to organizations leaning in on upskilling their people and digging in that regard. The pandemic really has focused CEOs' minds on many things, but I want to bring it back to that wellness piece again. We know that digital investments have been really important. We know that people are leaning into wellness, but again, as I mentioned before, as we see this pace of change come at just an exponential pace, as we see these disruptors like the pandemic come at us from left field, we know our workforce in the future is going to have to pivot, have to think differently. So how we create wellness and productivity all at the same time is really the next wave of conversation that has to happen.
Yeah, and Dave, on that front, are we seeing a difference in how private companies are considering these changes in workplace behaviors and culture compared to different companies and public companies?
We are, but with the ESG, it's coming. And so I think, Jean, you said it perfectly. The issues that public companies are facing are also going to be experienced by private companies. And so they're not putting it top of radar, but it needs to be. And, with the risk of just repeating what Jean said, it's interesting because there is absolutely a war on talent right now. It sounds cliche, but it's happening. We're even seeing it at PwC. But the people that we're talking to, the pandemic forced people to think differently, and we're seeing the demand for flexibility in the work environment. And Jean touched on these. The well-being of staff is certainly super important. And one of the things that I think has caught people off guard is so many employees now and organizations have realized that, hey, we can do some jobs remotely and we can do jobs sitting at home. And I was speaking to a client the other day who was talking about losing someone to an organization in Silicon Valley, and they were poached. This person was poached with the offer of, hey, you're already sitting at home. Why don't you sit at home and work for us? And you can come down to California a couple times a year, and we'll pay you a lot more, and we'll pay you in US dollars. And so if you're somebody who's very comfortable working at home, and this is an opportunity that you might not have even thought of 2 years ago, because you'd be thinking, geez, do I have to move down to California? It's really expensive. I'm not American. All those thoughts would be going through your head, but it's kind of flipped around now. And some of these organizations are saying we can go global in our search for talent, and we can go global for people. And so if you haven't set yourself up for success with your own people, you're going to see organizations like this one out of Silicon Valley showing interest in some of your best and brightest people. And for the first time, they'll start thinking about, wow, that is kind of cool to go and work for that company in California, where they would have never thought about it 2 years ago.
Yeah, that global search is interesting and something that'll be interesting to see how that develops over the next few years. Now, moving on, Reynolds, Albertans are very concerned. We touched a bit about this earlier around overregulation and government policy. But if we flip that, however, if they're focusing on the ESG and the workforce of the future, what are some of the positive outcomes we can all look forward to this year?
Yeah, I do spend lots of time in the industry, Matt, and talking to executives. And, I actually feel like the CEO survey, while it was positive and optimistic globally and reasonably positive locally, I actually think people are even more positive, and I'm more positive on the economy now than I would have been even 6 months ago. Like, I really feel like we've turned the corner. We've been living in sort of a rough market for quite a long extended period, even before COVID. And now I look at it, and not only is the market turning, the prices are better for some of our products, but we were already investing in things like ESG and in areas where we needed to invest so that we could attract and raise capital. So I do think that that's one key area. We were sort of ready for some of this and preparing for it probably before the rest of Canada. And then maybe the other one is, we've been living in a downturn for the last period. We've been having to retrain people and repurpose them and fit for today's world. And, even our schools like SAIT and NAIT have been repurposed to retrain some people along the way. And so I do feel like even from that perspective, we've been working on this for the last 2-3 years on sort of fit for growth and workforce of the future. And so I do think that we were sort of preparing for this. And now that we're in this world where it's hard to attract talent and there's really a war for talent, I do think we're ahead of the curve here in Alberta, which I think is great.
Great, thanks, Reynolds. Janice, do you have a perspective on what are some of the positive outcomes around ESG that we might see?
Yes, now's the time to do more. Investors are increasingly concerned about ESG impacts in their capital allocation decisions. And ESG is really set to become an absolutely important opportunity, not just in Alberta, but broadly, opportunity to expand long-term growth prospects and to really do that in collaboration with government and and policy developments that are going to drive investments into this sort of transition that we're starting to see towards a sustainable and more prosperous economy. At the end of the day, robust ESG plans will actually be a differentiator for the companies that capitalize on them. It's a real way to market products and services, to build that resilience into supply chains, as already noted, to help attract the right talent to your organizations, build that trust with stakeholders, particularly the younger workers who are so aligned in their values to the sustainability and environmental agenda. So a lot of positive outcomes. I think it's the view that companies take on this agenda and really using it as a lens towards that value creation opportunity.
Great. And Jean, what are your perspectives?
Yeah, I think, we've it's been a hard time through the pandemic, but and we know that there's the war on talent, but quite frankly, you need to see the other side of that. So the great thing is that people are disrupted anyway, and they've never been more open to working differently, to thinking about things differently, to believing in their abilities to pivot and change and do remarkable things in very short periods of time. And so there's this wonderful opportunity to harness that enthusiasm in your business. So as you're thinking about your workforce strategy going forward, as you're bringing people potentially back into your offices, don't bring them back to the way things were. You have this opportunity to really deconstruct and think about things in new ways. And that can, make you achieve your strategy faster. It can improve customer service. It drops money to the bottom line. It improves retention. There's so many benefits to really just taking this time to think through what that strategy needs to be going forward. It is really remarkable. And so, it's just, there hasn't been a better time in history yet, really, to really think about these people, the people structure and the issues, and how it's going to not only build a wonderful place for your teams, but also make your business better. And so, I think there's a lot of positives to look at and look forward to.
Thanks, Jean. Dave, any other final thoughts?
Yeah, and Jean and I maybe should have compared notes, because I'm just echoing everything she says. I mean, maybe it's great minds think alike. I don't know. But the comments that I have from a private company standpoint is, obviously things have changed significantly because of COVID, and the world will probably never go back to the way it was 18 months ago. But when we first went into the lockdown at the very beginning, there was sort of panic, and then there was the big kind of the lockdown, the layoff of staff, the sort of like, we're going to just hunker down and see what happens next. Then there was that sort of, okay, we need to stabilize and figure out how we work in this new environment, because we don't know how long this is going to last. I think it lasted way longer than anybody expected. And then there was that, we need to think differently about how we're doing business stage. And I'll give you a specific example on that one. We had a client who had lots of bricks and mortar locations, and they just couldn't keep them going because of health regulations, staffing issues, whatever. And so they moved to an online platform, forced their customers to move on to this online platform. It had a great uptick. Customers are now very comfortable with it. And so they're thinking a lot about, well, it just does not make any sense for us to go back and reopen all these bricks and mortar locations that we had previously. Sales are better. We're working at the convenience of our customers, because it's 24 hours a day, 7 days a week, and go to our website. So it would be really easy to slip back to kind of the old ways of doing things and just kind of go back to pre-COVID and the good old days. But to Jean's point, it's a unique time in history that, the smartest companies leverage this opportunity to think about doing business differently, think about how they approach the market. And so my one recommendation would be is, we all are going to have a story through this. We're all going to have stories about what we did differently and how we've changed. And I would say, don't be hesitant to tell your story, because people want to hear it. And, to that bricks and mortar client, stakeholders, customers, banks, they want to hear that you took advantage of an opportunity, turned a crisis into something more optimistic, and changed the way you did business. And you're stronger, you're better, and you're not going back. So don't hesitate to tell that story, because people want to hear it.
Great. Thanks, Dave, and thanks, Jean, Janice, and Reynold as well. So we covered a lot of information in that fireside chat. We hope you found the information valuable. We're able to draw parallels to your businesses. So we'd like to turn it over to you all. If you have any questions for our panel, we did have a couple come in, and around a lot of ESG. So maybe I'll throw this to Janice and then perhaps to Reynold. Regarding ESG initiatives, does PwC have any idea of the type of capital spend that the net zero initiatives will drive in Alberta? And how does that other capital investment in Alberta?
Well, I mean, we at PwC have really recently done a study on exactly that question, but more broadly within Canada. And, some of the big investments that we're expecting to see will be, around major expansions in, non-greenhouse gas electricity generation, new energy storage facilities, including smart grids and sort of intermittent energy patterns as part of the renewable power generation opportunity, as well as a very rapid scaling of technologies to capture and store emissions produced from, for example, blue hydrogen and consumption of traditional fossil fuels. So, when you start to look at that broadly, we've estimated about, up to 1.5 trillion in investments, and that doesn't even take into consideration distribution and supporting infrastructure requirements. But we are starting to see more and more discussions happening. We don't actually have at this time what that portion of the Alberta investments would be. But we do believe that a large portion of that will be coming from the government. There's accelerated plans happening from the federal government, the provincial government, but also a lot of the sort of large institutional investors playing and very interested and bullish on supporting the transition and financing the low carbon economy.
I can chime in a little bit too, Matt, just on, I agree with Janice. A lot of the spending is initially going to come from the government, I think. Like, it's going to be hard to obtain a strong ROI on some of these projects in the early years, and it really is. But the fact is, this transition's happening. It's happening around the globe, and so you can either ignore it or become part of it and see how it fits into your business model. And that's just a fact of life right now. And I would say we can see it in some of the discussions by some of our larger energy companies. They've acknowledged it, they're investing in it, and then they're moving forward. And so, is there a clear path? Probably not. But, the fact they acknowledge it and they realize they need to kind of go down this path to be able to attract capital is the key right now.
Right. Yeah. And we actually had another question here that's a bit of a separate question, but almost a bit of a follow-on. With the shift to energy transition and the fact that many energy companies are looking to expand here in this area, do you think, and perhaps Reynold, acquisition costs could get to be too high, resulting in overpayment in the industry, which ultimately could result in lower ROIs that won't generate the returns that shareholders might expect?
Yeah, I've dealt with enough international companies looking to put money in the Alberta market to know, it really comes down to project certainty, how some of these projects fit into their modeling, and then ultimately what's the ROI going to be. And until they can get project certainty, all the larger companies, and really figure out what the real ROI is, like these projects, as Janice mentioned, they're not even in the billions. Some of the infrastructure needed in the trillions of dollars. And so before a company spend $2, $3, $4, $5 billion, they really need to know what the return is going to be. So, I do worry a little bit that there could be some overpayment in the early days, because, if you rush in too fast, that none of this is going to happen as fast as maybe people think. Like, they're all mega projects with major dollars behind them. So, my advice would be to go slow and sort of take your time on some of these large ones, because there's lots of uncertainty still, and they're all big dollars. Another
question here, maybe throw it to you, Janice. A recent publication from the U of C School of Public Policy recommended Alberta take CSR DEI requirements out of the hands of regulators and leave it to the financial markets to drive mandates in those areas. Do you think that focus on ESG is evolved to the point that a market-driven approach could be effective, or do we have more room to grow before that becomes a reality?
Well, I mean, I would suggest that actually that's the reason that ESG has taken such a top agenda role. It's not really come from government or policymakers. It's truly come from the investing community, driving action, driving responses, better, more informed disclosures to start with. So, I do think it'll become a hybrid. We're moving down a journey. Companies and organizations are playing a substantive role in leading this agenda and positioning their businesses. But, the regulators, the securities administrators are all sort of coming along on board to almost identify and align. And I think the biggest role that they'll have is maybe in the standardization and how this is actually done in a way so that, we have a lot of different standards, a lot of different requirements happening. Companies have many requests coming at them to do this correctly. And I think everybody's looking for that standardization and uniformity in how it's done. So it's likely to be a hybrid approach. I think business will take the leadership, and they probably should, to drive the economy forward in a way that is sustainable and just. But at the same time, I think government and regulators will have a role in advising on how the standardization might happen as well.
From a diversity, equity, and inclusion perspective, there's a lovely body of research now emerging that shows that when you have an inclusive culture, when you have a diverse workforce in leadership and board, that you are more profitable, you are more innovative, you grow faster, you access new markets. So yes, the social imperative is there, but it's good. It's just plain good for business as well.
Ron, was that you that was going to jump in there also?
No, that was me. And believe it or not, Matt, I wasn't just going to repeat Jean. So we actually have divergent thoughts, Jean. So I think, Jean, you had talked previously about trust, right? And I was on a call today, and it was some of our counterparts in Europe, and they were talking to Janice's point about the role that regulators are going to play. And the conversation was a lot around people are throwing out terms like, net zero by a certain date. And now people are starting to say, well, what does that mean, and how do we prove it, and what is the framework to be followed? And to your point, Janice, I think what we're going to see is the public will start saying, how do we trust what you're saying? Which the regulators will then step in and say, we need to know that this net zero has been achieved, but what framework? How do we report it? How do we make sure it's standardized? So to your point, it will be kind of industry driven, and it's already being seen because these comments are being made, including by us as PwC. But how do we validate it, make it trustworthy? All that other piece will come afterwards, and probably pretty quick.
Well, thank you, Reynold, Janice, Jean, and Dave, for a great session. Again, I hope everybody took a lot out of that. I know I did. If you have any further questions, please feel free to reach out to any of our speakers or your PwC contact. We're happy to meet with you on broader terms or your broader team, to review the themes or discuss any of the specific content we covered today. I hope you enjoyed our chat.